In today's video, I'm going to teach you how to use Finviz for penny stocks. We'll walk through a clean, repeatable way to filter for low-priced names while keeping a strong focus on liquidity and quality. Penny stocks can be extremely volatile, so the goal here is to quickly narrow the universe to tradable candidates, not to make predictions. Start by opening your browser and going to finviz.com/screener. This is the core Finviz tool where you apply filters and watch the results update in real time. Once you're on the page, click the All tab near the top. That view reveals every category of filter at once: descriptive, fundamental, and technical, so you won't miss anything important as you dial in your criteria. Now set the price filter to under $5. This defines the penny stock range for our scan. Different traders have different cutoffs, but using under $5 captures a broad, active set of low-priced stocks while still keeping the list manageable. Next, select the exchange filter and choose NASDAQ, NYSE, or Amex. Sticking to these major exchanges helps you avoid many illiquid over-the-counter names and generally improves transparency, order execution, and available data. It's a simple change that often elevates the overall quality of your list. For tradability, set average volume to greater than 500K. That threshold helps filter out thin names with wide spreads. If you want even smoother entries and exits, you can tighten it further to greater than 1M. More average volume typically means better liquidity and less slippage, which is crucial when working with faster-moving penny stocks. If you want to spot unusual activity, optionally add relative volume and set it to greater than 1.5 or even greater than 2. Relative volume compares current trading volume to the stock's typical volume. Higher values can signal increased interest, catalysts, or momentum shifts worth a closer look. To further refine your setups, consider optional technical filters. For example, setting RSI between 40 and 70 helps avoid extremes, keeping you away from names that might already be overextended or too weak. You can also require price above a moving average, such as above the 50-day or 200-day, to focus on stocks holding trend support rather than breaking down. With those filters applied, you've built a focused penny stock screen emphasizing exchange quality, liquidity, and actionable technical conditions. Treat the output as a shortlist for deeper research, and always pair any scan with smart risk management. This streamlined approach helps you move from a huge universe of low-price stocks to a workable watch list you can evaluate with confidence.